Thank you, Fahad. Hello, everyone. I'm Miriam Babgi, Investor Relations Manager at MBC Group. With me today are Mike Sneesby, our CEO, and Hussam Al-Nouri, our CFO. We're pleased to welcome you to MBC Group's Q3 2025 earnings call. Today, we'll take you through the group's financial and operational performance for the first 9 months of 2025 and highlight the key strategic developments shaping the remainder of the year. Mike will begin with an overview of MBC's performance highlights and operational progress. Hussam will then walk you through the group's financial results and segment performance in more detail. Finally, we'll conclude with an update on our strategy and outlook. Before we begin, I'd like to read out the standard disclaimer. The information and opinions contained on this call are provided as of today's date, are based on general information gathered at such date, and are subject to changes without notice. None of the future projections, expectations, estimates, or prospects discussed on this call should be taken as forecasts or promises. These forward-looking statements involve known and unknown risks, uncertainties, and other important factors that could cause the company's actual results, performance, or achievements to differ materially from those expressed or implied in these statements. Thank you, everyone. Mike will now begin the presentation.
Well, thank you, Mariam, and hello, everyone. Thank you for joining us today for our earnings call. We're especially excited to be hosting this call for the very first time from MBC's Nargis studios right here in Riyadh. And for the football fans among you, you might recognise this as the set of our flagship talk show, Nadina. Over the 9 months of 2025, MBC's group performance continues to demonstrate the strengths of our diversified business model and our disciplined execution across all segments. Boca continued to be the group's main earnings contributor, driven by strong performance in broadcasting and technical services contracts, which grew by 31%, and by resilient TV advertising, up 5%. This solid performance reflects MBC's diversified client base and extensive reach. Shahid also maintained its strong growth trajectory, delivering double-digit increases across both its SVOD and AVOD platforms, anchored by premium Arabic storytelling and advanced user experience, along with in-house production synergies through MBC Studios. This was further supported by solid subscriber momentum and expanding B2B partnerships. MBC's M&E segment continued to benefit from the steady project deliveries and growing management fee income. Together, these results reflect the strength of our strategy, our agility in execution, and our ability to sustain profitability in a dynamic media environment. From a financial perspective, group revenues reached 3.8 billion riyals, up 30% year-on-year, supported by broad-based growth across all segments. Gross profit stood at 1.1 million riyals, up 23% year-on-year, and representing a 28.9% margin, reflecting balanced contributions from broadcast, streaming, and production activities. Net profit for the period was 428 million riyals, an increase of 71% year-on-year, with the margin expanding to 11.1%. Hussam will break down the financials in more detail a bit later, but overall, the group's performance reinforces our strong financial foundations, operational discipline, and the continued success of our content-led growth strategy. Turning now to our business segments, each of which continues to play a distinct and complementary role in driving MBC's growth story. Boca remains our foundation and the largest contributor to both revenue and earnings so far this year. We've maintained strong advertising momentum supported by a highly diversified client base, while continuing to expand our broadcast, technical services, and distribution work with key partners across the kingdom. We also continued to strengthen our institutional relationships during the period, with several new and renewed contracts signed with government entities. This reaffirms MBC's position as a trusted media and production partner to national programs under Vision 2030. Most recently, we signed an MOU with the Cultural Development Fund to enhance cooperation in content investment and financing, further supporting Saudi Arabia's growing creative economy. Shahid, our OTT platform, remains a key pillar of our growth and digital transformation strategy. During the first 9 months of 2025, we expanded both reach and monetization, enhanced unit economics, and improved cost efficiency. Subscriber growth across MENA remains strong, supported by the sustained impact of our password sharing policy and the continued expansion of B2B partnerships. International revenue momentum for Shahid also remains solid, with international B2C revenues now approaching 20% of total B2C revenue for Shahid, underpinned by a 28% CAGR in growth of revenue over the past 3 years. This performance reflects Shahid's expanding global footprint and the growing international appeal of Arabic content. As international revenues become increasingly material, this area represents a key growth opportunity and a strategic priority for future investment. On the AVOD side, we continue to record robust digital advertising growth, launching innovative ad formats and onboarding new digital clients that are helping diversify our revenue mix. Finally, our media and entertainment initiatives segment continues to deliver premium content and large-scale projects that reinforce MBC's position as a regional production leader. We executed several high-profile initiatives this year, sustained a robust slate of scripted and unscripted projects, with around 90% produced in Saudi Arabia, and continued advancing local talent development through MBC Academy programs. Together, these segments reflect a well-balanced business model built on scale, diversification, and innovation, and positioning MBC to continue leading the region's evolving media and entertainment landscape. Content remains at the core of our strategy. It's what defines MBC and drives viewership, engagement, and monetization across every platform. During the first 9 months of 2025, our content mix has continued to evolve to balance entertainment, storytelling, and sports, reinforcing both audience engagement and brand leadership. Internationally, the voice of Hind Rajab earned the Silver Lion Grand Jury Prize at the Venice Film Festival. Our flagship co-production, Desert Warrior, premiered at the Zurich Film Festival, a milestone for Saudi cinema. Titles like these that underscore our expanding global storytelling capabilities. On the scripted front, Omi and Salma sustained strong cross-platform appeal, while unscripted successes like The Voice and Nadina continued to draw broad audiences and engagement. With a renewed sports strategy, Shahid sustained strong subscriber retention, driven by an expanded sports lineup and a broader entertainment offering. During the quarter, we added European domestic leagues, including Germany's Bundesliga, Italia's Coppa Italia, and Spain's Copa del Rey. Locally and regionally, we added the SAFF Women's Premier League to our portfolio, alongside our landmark partnership with the Kings League MENA, bringing an innovative, creator-driven football format to both MBC Action and to Shahid. We're also in the process of adding an array of Saudi local leagues and sports events to further broaden our offering and our audience base. Overall, our content slate remains highly diversified and commercially effective, balancing entertainment, monetization, and brand leadership. Our Al Narjis production hub continues to represent one of the most tangible expressions of MBC's strategic positioning in the Kingdom of Saudi Arabia. Today, 3 studios are fully operational, supporting a broad mix of live and pre-recorded productions. Our new office building, which can accommodate more than 250 staff, is also fully operational and now houses teams from both Dubai and Riyadh, bringing together creative, technical, and operational talent under one roof. Several industry partners have established a presence on site, reinforcing our Narjis role as a collaborative hub for the local production ecosystem. And finally, design coordination for the new TV building is in its final stages, with groundwork set to begin very soon. The facility will add significant production and support capacity to the complex, featuring 5 state-of-the-art TV studios equipped with live galleries, backstage areas, audience zones, and additional office space. Al Narjis is rapidly evolving into a world-class content campus in Saudi Arabia, strengthens the kingdom's growing position as a regional epicenter for media production. Hussam will now walk you through our financial performance in more detail.
Thank you, Mike. Hello, everyone. Across the group, we achieved another solid quarter, underscoring the strength and resilience of our diversified business model. For the 9-month period, revenue reached 3.8 billion riyal, up 30% year-on-year, supported by healthy growth across all 3 segments. Gross profit rose 23% to 1.1 billion riyal with gross margin of 28.9%, supported by a healthy performance across all 3 segments. Boka maintained strong profitability. Shahid expanded its margin through higher subscription revenues and cost efficiencies. And M&E continued to deliver healthy margin in line with project delivery. Net profit increased 71% year-on-year to 428 million riyals, with net margin expanding 2.7 percentage points to 11.1%, reflecting improved operating leverage and disciplined cost management. On a quarterly basis, group revenues stood at 810 million riyals, up 7% year-on-year, while gross profit climbed 32% to 269 million riyals, and net profit rose 8% to 14 million riyals, underscoring the resilience of our business despite softer market sentiment and geopolitical uncertainties. Overall, these results demonstrate the effectiveness of our strategic execution. We remain focused on sustaining growth and profitability through prudent cost control, digital optimization, and disciplined approach to capital allocation. Our Boka segments continues to anchor MBC's performance as the largest contributor to group revenues and earnings. For the 9-month period, Boka revenue reached 2.1 billion riyal, up 21% year-on-year, driven by solid execution across all subsegments, including television, advertising, and broadcast and technical services contracts. Gross profit increased to 752 million riyal, up 15% year-on-year, while net profit rose to 431 million riyals, up 45% year-on-year, reaffirming Boka's position as key earning engine for the group. Growth was supported by continuation of our broadcast and technical services portfolios. Advertising performance also remained resilient, supported by strong momentum, especially in Egypt, where we are witnessing an exceptional growth. While the conclusion of SSC contracts represent a short-term challenge, we are actively mitigating the impact through new commercial activities and ongoing operational optimization to support medium-term growth. Overall, Boka consistent delivery, recurring revenue visibility, and operational efficiency continue to provide a strong foundation for MBC's financial performance and also stability. Now moving to Shahid, for the 9-month period, revenues rose 26% year-on-year to 1 billion riyal, driven by healthy growth in subscription and advertising revenues. SVOD revenues increased 27% to 814 million riyal, supported by strong subscriber growth, higher retention, and the sustained positive impact of our password sharing measures. Shahid continued to expand its B2B partnership, most recently through the new agreement with E&N in Egypt, which is helping accelerating our regional reach and subscribers growth. AVOD revenues also performed strongly, up 23% year-on-year to 175 million riyals, supported by innovative ad formats, expanding digital inventory, and also new client wins. Looking ahead, digital advertising remains one of Shahid's strongest growth levers, and we expect to play a larger role in driving monetization. During the period, Shahid maintained a strong subscriber retention, supported by expanded lineup of sport and entertainment content. The addition of new leagues further diversified our sport portfolio and strengthened engagement. Meanwhile, International subscribers now represent a growing share of revenue, reinforcing Shahid's expanding global footprints. A profitability standpoint, Shahid's continued to improve its economics, delivering a net loss of 23 million riyals for the period, compared with a loss of 61 million riyal last year. Turning to our media and entertainment initiative segments, revenue nearly doubled year-on-year to 687 million riyal, reflecting the impact of project-based accounting, while revenues increased when milestones are achieved. Net profit rose to 20 million riyals, up 47% year-on-year, reflecting the continued delivery of major initiatives and growing management fee income from commercially structured content. This result reflects our ability to deliver large-scale projects on time and the benefits of our project-based revenue model. Overall, M&E segment continued to gain commercial and cultural significance, reinforcing MBC's position as both a leading content producer and a key enabler of Saudi's rapidly developed media ecosystem. Finally, I want to reiterate our guidance, which we believe reflects MBC's strategic direction and growth trajectory. Over the medium term, Boca is expected to deliver mid-single-digit revenue growth, targeting a net profit margin between 16% and 18%. Shahid is on track to achieve a full-year break-even by 2027, supported by continued subscriber growth and increasing ad revenue, and we expect annual revenue to grow in low double-digit over the medium term. M&E profitability is projected to improve, with net profit margin reaching around 5% in the midterm. This concludes my remarks, and now back to you, Mike.
Well, thank you, Hussam. And before we move to the Q&A, I'd like to take a moment to walk you through the key elements of our strategic focus for 2025 and how this is supporting our performance and setting the foundation for the next phase of our growth. Through disciplined cost focus, structural optimization, and targeted growth initiatives, MBC is strengthening its resilience and building a strong foundation that is positioning us to invest confidently in high-impact opportunities across the region and global markets. Building on this foundation, our strategy moving forward focuses on modernising and future-proofing our linear TV business. We'll achieve this by leveraging data and technology to enhance our advertising value proposition and further diversify revenue streams beyond traditional advertising, helping to mitigate the impact of external and geopolitical factors. We're also continuing our investment in Shahid's growth through the production of high-quality, original Arabic content, driving operational excellence, and expanding into high-growth markets. In parallel, we're enhancing our AVOD platform through advanced technology and innovation to reach broader audiences and optimise content monetisation. With content at the core of our success, we're using deeper data insights to create audience-driven programming and maximise its commercial potential. Finally, the solid foundation built in 2025 positions MBC to expand into high-potential international markets and complementary sectors that drive greater value and diversification while preserving the group's agility and operational strength. Together, these initiatives highlight MBC's ability to adapt to evolving market dynamics and reaffirm its commitment to long-term growth and innovation anchored by AI, technology, and strategic partnerships. Well, that concludes our results presentation for the 9-month period of 2025. We would now like to open the floor to your questions.